Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, 19th of December. Looking at cable, which has retreated in the last few sessions, a retracement of this big bull run. I've taken it from basically the October low, which is where that rally really kicked off after Boris Johnson got the agreement from the EU, then had the election period, and then markets started to price in a Conservative government, had the Conservative government, which spiked to the 135 big figure area, but then started to retreat, and that retreat really started to take hold in the last couple of days as Boris Johnson and the Conservatives started to suggest that the withdrawal agreement transition period would end in law at the end of 2020. Now, interesting that we've started to find a bit of support because this retreat has gone through 23.6% fib, 38.2% fib is 30.10. Now, 30.10, interestingly, is the breakout point, and old resistance becomes new support, and that is a support area. So subsequently, that 38.2% fib level is a good target area to start thinking about long positions again, I think, because I think that is a good support band now. Interestingly, 130.50 was a reaction low just prior on the day of the voting of the election, but again supportive. Yesterday, 30.57 as yesterday's low. The RSI 57 tends to 53. Sorry, tends to be in this period tends to hold up above 50. MACD lines have crossed lower and stochastics have crossed lower, so that's reflecting this corrective slip, but into support band here. So it'd be very interesting to see if that support can now start to build and market can get past this news that of the transition period. But 30.50 certainly looks to be a support on the hourly chart, and the market has started to find a bit of support there as well. So how this market develops in the next couple of days will be interesting. You've got the 23.6% fib around 32 big figure as a resistance, and 33 figure was that old reaction low which became resistance. So 32 and 33 figure is resistance overhead, but just at the moment the market is contemplating support. Now that has been hit a little bit in the last few minutes by the news that retail sales disappointed pretty strongly for the UK in November, but those figures do not include Black Friday, and they obviously don't include any sort of reaction that you might get following the election. So into December's numbers will be more pertinent, I think, and we obviously won't get that until the new year. So that could be why you're not getting too much of a reaction at the moment on sterling. But we do expect to see a basis of support starting to build around that 30 big figure area. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.